Cole. It's nice to meet everybody. Andrew, good to see you. Josh, good to see you. And today, I'll be pitching Bitcoin. So a little bit about myself, background. I have a lot of experience in crypto. Been in this space for now 3+ years. Took a gap year to work at this blockchain analyst firm called Nansen, and then worked at a digital asset startup called Tonic during the summer. Part of the Stanford Blockchain Club. Spent a lot of time researching blockchain. So that is kind of my experience there. So also my experience is I'm really fond of contrarian investments where the market currently has pessimist perception, yet fundamentals are good. So my first ever pitch was a double pitch as my analyst application. I pitched Meta back when everybody hated Meta. And Solana, back when Solana is a cryptocurrency that went from number 20 to number 3 behind Bitcoin and Ethereum. And since then, they've done pretty well. So at the time, right, Meta now is like supposedly a good asset, Magnificent 7. But at the time, right, people thought TikTok was gonna like take over. You had Apple privacy changes, and you had Zuckerberg getting memed on, right? And you had the metaverse word, right? So, and all these different things. But the thing was, if you just see clearly the price to equity ratio, it just didn't make any sense. And perception, what I learned over this past 2 quarters is perception changes really quickly. And this is how fast perception can change, right? Look at Meta. It's just with this AI narrative. Their earnings have like 1.5x, but look at the price, right? It went from a P ratio of 11 at the time of pitch to now 35 because of their idea of AI, right? There's another idea in cryptocurrency space, right? Back after the FTX crash, FTX was heavily involved with Solana, right? And basically what happened is it became the number 20 cryptocurrency, it fell from number 4, right? But the activity there, if you just saw through the fundamentals, it made just complete sense that it was very, very undervalued. And perception, even though the network, it didn't become much better. The perception changed, right? So here's an introduction to Bitcoin and IBIT, which is BlackRock's ETF for Bitcoin. So what is Bitcoin? Started in 2009. Innovations, it was a append-only distributed database of who has what Bitcoin, secured by miners, right? So you have people who mine Bitcoin, they keep track of their own ledger, right, of who has what Bitcoin. And basically through this, you have this fixed supply asset where people mine a fixed supply embedded at the protocol level of 21 million Bitcoin. And by 2040, there will be much more Bitcoin mined, but right now it's circulating at 18.9 million Bitcoin, right? So you can think of it as like digital gold, right? So what is Bitcoin good for, right? It's a digital currency, that's a potential application. It's accessible to anyone with an internet connection, right? You don't have to go and buy a gold bar or have access to like an ETF if you're from a different country, right? It can be used for payments. So what's most interesting to me is this idea of a store of value. And this will become really important as the presentation progresses. And here's an article from the state of my family. In Venezuela, inflation rate is crazy, right? You have Argentina, you have Turkey. And these countries, right, when you have inflation where you have like the very next year, after 2 years, like your currency devalues by like 90%, right? It's like, what do you hold? What do you hold? And the answer for this author, Carlos Hernandez, was Bitcoin, right? So if you can think of Bitcoin as digital gold, let's say we come up with this framework with that. Bitcoin is 890 billion market cap. Gold is 13.75 trillion in market cap. Not going to put any assumptions there, but that's just to give you a sense of Bitcoin's size, right? And here's the price action since 2015, right? It's incredibly volatile, so I'll address that in the future. Here's a timeline, right? I'm sure that a lot of your perception on crypto is that crypto is probably dead. Crypto has some problems, and this is probably why the news has battered down on crypto for the past 2 years, ever since maybe you remember FTX, one of the second largest exchange, the most well-known exchange to people in the US. It collapsed. So you had this timeline where you had Luna and Terra, which was what's called a stable coin. They held billions of dollars in Bitcoin, and they were an algorithmic stable coin, which people parked billions of dollars in to gain interest. This algorithm, it didn't work. It ended up being basically a Ponzi scheme, and it collapsed. And what happened was you had immense after effects, kind of like 2008, where because Luna collapsed, Three Arrows Capital, which is one of the biggest hedge funds, it had $3 billion and was using immense leverage. It went under. And guess what happened? 3AC was on leverage. And guess who they had borrowed money from? They had put down collateral for 4 different lending. They had put down collateral for 4 different lending entities, the 4 biggest lending entities. And BlockFi, Genesis Lending, Voyager, they were forced to liquidate. They're the lenders, and they went under. And guess what happened? FTX tried to be the hero, at least in the media, but they're facing problems. And they collapsed too. They faced a bank run from this fear. And you probably know what happened there. So after that, right, you had the most extreme pessimism. You had all the major financial entities, but Coinbase go under. You had suspicion on Binance. You had people being scared of this stablecoin called Tether, which is used to buy Bitcoin. And so you had like the biggest black swan in history, if you consider it like a black swan. But the government crackdowns on does crackdowns on crypto. BlackRock files for a Bitcoin ETF June of 2023. So that's where the tides might be shifting, right? And then recently, right, Binance, which is the largest crypto exchange, Binance US shuts down. It pays $7.1 billion to the US, right? And CZ, the CEO of Binance, there's like prediction markets have a 40% chance he gets jailed in the US, right? So you have still some of this pessimism, but the tides are shifting. So Bitcoin ETF history. So what's an ETF? It allows for you to have access to liquidity. When you want to buy cryptocurrency, what do you have to do? You have to go on Robinhood, or you have to go create a crypto exchange account on Coinbase, right? And you have to buy there. Well, institutions, they don't want to do this, right? They're not going to use Robinhood, and they want some legitimacy, right? And so the Bitcoin ETF, it has had a history since 2016 of people basically trying to file for this. You had Grayscale, you had VanEck, you had Wisdom Tree, you had Ark Invest, and all these entities trying to file, but they kept on getting rejected. Because of SEC right now, under Gary Gensler, they're very strict. And but yeah, there's this thesis like more liquidity, more inflows. Now that BlackRock, Fidelity, and Invesco and Franklin Templeton now have filed and gotten accepted as Bitcoin ETFs. Now you have some legitimacy, which allows institutions to be able to invest, as well as people who have 401ks. So it was approved, and you had all these major financial entities get their ETFs accepted. They take some fees, and you have very good inflows, which we'll see later. But well, just first of all, the counter arguments, because this is quite a contrarian idea. But with contrarianism, you have the potential, as long as you don't see, as long as you can measure the downside, right, in an asset, you can have you can have much higher upside than more efficient assets like Coca-Cola, right? So is Bitcoin worthless, right? That's a pretty big argument against Bitcoin. So the answer to that is people value different things at different levels, right? And the market is really the average, the weighted average of all these beliefs. And as long as someone believes that something has value, right, or a group of people, then it does, right? And so for believers, Bitcoin's intrinsic value lies in being an uncorrelated asset. Its intangible properties, like being digital, immutability, computationally secure, decentralized, scarcity, and where it's utility for payments and store value. So is Bitcoin worthless? Well, throughout history, we've had lots of news regarding pyramid scheme, going to go to zero. Bitcoin is dead along with digital currencies. And every single time, right, this marks really the bottom of Bitcoin. And so is Bitcoin worthless? So, like, one of the important things is people think that it's volatile, right? And it is volatile, right? You had massive leverage back in 2021, 2022, when you had massive exuberance, right? You had a black swan with all these lending giants going down. Yet Bitcoin still traded at $15,000 when you had every single major financial entity but Coinbase go down or be at risk of being cracked down on Binance or Tether, right? So that's potentially the downside risk if you have again a repeat of 2022, right? That's the downside risk because you still have people believing at $16,000, at $15,000 that this asset still has value, right? Bitcoin consumes electricity, right? It consumes just as much electricity as Chile, right? ESG funds, question mark, question mark. So does it consume energy? Well, it consumes 0.54% of electricity, less than Malaysia or Sweden. And if you assume that this asset is getting legitimized by BlackRock, which is also ESG proponent, right? Larry Fink is turning the tides there. And if you think that this will become a digital gold, right? Should it be maybe consuming just as much electricity as Sweden? I don't know the answer to this. But secondly, right, miners are constantly searching for the lowest cost source of energy, hydro, wind, solar. And when you have that, right, the perception of this will change, right? Because you have miners who are going to be using wind, solar, hydro when it is the lowest cost. And that trend is going to continue. Bitcoin for money laundering. Elizabeth Warren is a pretty big proponent of that, and she gains a lot of her popularity based off of arguing about the monetary system and how some of these crypto assets are not necessarily good for these illicit activities, right? They have $24 billion supposedly, laundered by illicit addresses, right? But the truth is crypto accounts were less than 1% of all illicit activity. And the Bitcoin blockchain, my background is literally in finding these addresses, literally just looking at this open database and tracking down who is who, right? That's what I did 2 years ago, right? And it's harder to launder money than most people think on the blockchain because it is open and it is decentralized, right? Strict regulatory crackdowns, so I think that it's actually a good thing that we have more transparency. We're having Binance US being shut down. You're having all this regulatory crackdown, but I think that's a good thing, right? Laws that enforce more transparency and structure for the firm operations is a good thing. It adds more legitimacy to this asset, which is quite pessimistic right now, right? And BlackRock, Fidelity, Van Eck, some of your biggest names in finance, right? You have them promoting this asset as a store of value to previously a gray area asset. Perception changes quickly. So the BlackRock CEO, Larry Fink, in 2017, I just came across this headline. He calls Bitcoin an index of money laundering, right? And then in 2023, right, this is the most pessimistic scenario, right? But in 2023, right, Larry Fink says Bitcoin could revolutionize finance, right? And I think the answer is somewhere in the middle, right? But the perception changes quickly, and perception is influenced by incentives and price action. So volatility. 5% allocation provides Sharpe ratio of 0.85, so that's historically, that's very, very good, right? And then estimatable downsides, right? You had the biggest black swan in history, you had a very big black swan, 14 to 16K, Coinbase, Tether failures, recession, fear of recession, those would be comparable things if we were to hit these levels, right? And I don't believe that will happen, right? For good reasons. 30 to 35K is kind of, I believe, the downside. That's where kind of this run up occurred in anticipation of ETF. If we have underestimated regulatory crackdowns and bans of certain crypto assets. But it's really hard because BlackRock is such an influential player in this space. So here's an investment thesis. Bitcoin is a misunderstood asset with measurable downside and asymmetric upside. And we have three major catalysts that I believe why I have seen in the game myself. Like I had seen in the game for Meta, Solana, and now it's Bitcoin. And so you have the Bitcoin ETF, right? The ETF brings in institutional adoption. With the ETF, legitimacy and the ability to buy Bitcoin by institutions becomes possible. And here's like the reason. Bitcoin has outperformed every single major asset throughout time, right? It has a correlation with traditional assets at 0.27 over the past 5 years, right? So it's an uncorrelated asset. Q4 2023, 74% of institutions, this was mentioned in surveys, right? 74% of institutions plan on buying crypto, right? 64% of institutions with crypto plan to increase their allocation. So we're not talking about 10%, we're not talking about 20%, we're talking about 74% of institutions that say they plan on buying crypto. But as we know, institutions, they don't want to take the first step, and it's very hard to take the first step. So they tend to be followers, and that's how you get potential bubbles, right? Or you get reflexivity. So ETF is bringing in net inflows. So right now you have some net outflows because of Grayscale, which is this form of trust, right? And trusts are different from ETFs because trusts cannot adjust their supply. You cannot redeem Bitcoin in a trust, right? So you had arbitrageurs who saw 50% discounts in net asset value of this trust, buying, and now they're selling at like the actual price. So yeah, billions of dollars in outflows, but you have net inflows, like hundreds of millions, like every day, right? And the price is holding despite, like Grayscale had like $7 billion of Bitcoin, right? And all of it's like really being sold. So yeah, so here's a graphic of the net inflows and net outflows, which is due to GBTC, right? Here's projected impact, right, by Galaxy. So I don't actually believe too much of this, but like here's the potential price impact, right? You have this month, you had $4 billion in like inflows from these ETFs, right? And these buys they increase the market cap, right? And you have potential price impact of 74%. The problem is that you have a major run up before this ETF approval, so that does bring long adjustments. But also you have to consider the impact of people seeing these inflows and seeing the price action and following this price action, right? So this is the impact of net inflows, but you will also have people buying as they see the price of Bitcoin, as they see institutions buy. So you have on and pro. Here's gold after its ETF approval, right? This is before like the government started printing money. Why did gold go up so much? I don't necessarily know, but maybe you have some correlation, some like connection, right? So that's something interesting to look at, right? Before it's hard to buy gold, now it's through an ETF, it's a little bit easier, and you have this run up through time. Cyclical properties create upside, right? I'm really interested in cyclicality. Bitcoin is the most cyclical asset, right? It peaks at an all-time high. It suffers a 80% recession in the price, which bottoms. Bitcoin starts to recover. It takes around 2 years. Everybody starts talking about it, and the cycle repeats because, unfortunately, like Bitcoin is the most reflexive asset because it doesn't naturally have cash flows, right? And I believe this will change with time, and it becomes less and less cyclical, but it is still cyclical. It is a reflexive asset. So each bubble has a familiar pattern. Here's something about bubbles. High conviction. Investors start buying Bitcoin when Bitcoin is boring and unloved. The resulting rise in Bitcoin price attracts media attention, which then attracts investors, many with lower conviction and shorter time horizons. This drives the price of Bitcoin higher, which drives further attention and investor interest. The cycle repeats until demand exhausts and the bubble crashes. And here's a quote by Matt Baum, who's one of the investors at Paradigm. Although painful, each bubble leads to broader awareness and motivates Bitcoin underlying adoption, gradually expanding the base of long-term holders who believe in Bitcoin's potential as store of value. Here's the Fidelity CEO on Bitcoin. She is a Bitcoin bull. She just doubles down on it every time, and now she does the Bitcoin ETF. Plus, there's a happening in April as a catalyst, so you have this shrinkage in, you have 50% shrinkage in miner rewards for Bitcoin. So you have inflation in Bitcoin, and Bitcoin rewards in April 2024 will be halved at 3.125 Bitcoin per block mined every 10 minutes, right? And less Bitcoin available to buy, if miners have less to sell, potentially you have greater price action because you have this. And you can think about like reverse stock to flow. Gold, people find it easier and easier every year to mine gold, and the stock flow decreases, Bitcoin increases, and there's pretty shocking like this pattern thing. I don't want to say anything, but like these three levels, right? These were the Bitcoin halvings, and you had supply shocks, right? So investment thesis, right? Shelling point for monetary chaos and war, right? Shelling points are like focal points. Like this is a framework like I started using recently, and in shelling point asset, you can think of it as an asset that consumes attention around trending topics of conversation in the market, right? I underestimated the importance of this. I bought some like NVIDIA for my brother 3 years, like two years ago, 3 years ago, when I saw AI as a trend, right? And I underestimated it. I told him to sell it like when at 3x or 2x, and because I thought it's like going to be a bubble, right? It's like oh shoot. Okay. So government war is a trend, right? Here's this. You have all these trends: hyperinflation, Venezuela, Turkey, right? Argentina, right? Inflation rate's crazy, right? Economic chaos is right. Yellen warns of economic chaos. You have Druckenmiller, one of the most successful investors and cyclical investors in the industry, like looking at $200 trillion in entitlement debt, and yeah, and you need to know how to rank your beliefs, not according to plausibility, but the harmony might cause, right? And this is potentially a threat, right? And so Bitcoin is a shelling point for fear, right? As like, here's what Larry King says, there's Jenny Johnson, and they create these narratives, and just like NVIDIA and AI right now, if you see AI as a trend in the future, right? Like before 3 years ago, it was sort of a trend, and it's now the topic of conversation. Well, what asset do you buy? And I believe Bitcoin is a strong point for fear in monetary chaos, war, and hyperinflation. Right? You have some of the biggest names starting to talk about this, right? And create this narrative that Bitcoin is kind of a strong point asset. It's a safety asset that has generated extensive return in history. So I actually, this is a hot take, but I think El Salvador bought a bunch of Bitcoin in 2021 during the bulk, like during kind of the start of this bubble, right? And now it's in the green. And what is there to gain for small governments with monetary, like bad monetary policy, if they buy Bitcoin? Popularity, generating returns, safety against currency. I think that you might see several governments in the next 2 or 3 years start to buy Bitcoin. And that sounds crazy, but like, yeah, that's the conclusion. Contrarian asset, incredibly misunderstood. Historical cyclical price action, price high upside news reflexivity has not yet begun, be it by the halving. Bitcoin will be a focal point of market attention as clear trends of war, ungovernable inflation, and U.S. monetary policy bringing chaos. It could be like, let's say, a hedge against chaos. That's what it could be, right? Guided by, I think, Johnson and several other influential figures like the CEO Franklin Templeton. Governments buying Bitcoin as a reserve asset is not improbable as you might think. Okay? Risk, crypto entity fraud, regulatory risk, macro risk, protocol risk, fear of network risk from Bitcoin miner rules having quantum computing. These things are like I can address. Recommendation, 10% allocation. Time horizon 2 to 3 years as a continuation of the cyclical, or 6 years as a long-term goal. Market buy order right now it's 45,000. And I wanted to leave you with this. Inefficient assets tend to be little known or followed, taboo or controversial. So that's the pitch. Thanks so much, guys.